Just wanted to make a video just to kind of refine and put into a video what my strategy is that I'm refining at the moment and just kind of, learning. There's lots of different strategies to learn, of course, but this is just one that I like to do when potentially I'm personally a little bit risk off at the moment. So I'm passively bullish, but I kind of like this strategy on pulling back towards the market, basically. So what is the strategy? So it's pullbacks. So what I'm looking for is pullbacks and stocks that have an excellent D1. So they have a really good daily chart. So that is the strongest bit that we want to see. We want to see relative strength on those stocks versus the S&P 500, and ideally you want to see that over multiple time frames, but you definitely want to see it clear and obvious on the 5 minute and upwards of those time frames. But I'm mostly referencing the 5 minute and the daily for this one. So bullish on the daily chart, don't want stuff that's crap, bottom feeding, don't want to be doing that. Strong stocks. We want a D1 void available for those stocks, so space for the stocks to move into. Relative strength within the sectors, so we don't want to pick a very good stock, in a crappy sector, because that stock is very much swimming up tide. Especially if the market turns against it, it's just not a good opportunity, really. And we want good relative volume, and we want to make sure that this overall thesis is in line with what we think the market is doing. So at the moment, I'm passively bullish, so I'm mainly looking at bullish picks, and I'm swing trading, so I don't have the time for day trading other pieces. So I don't have enough conviction or confidence at the moment to trade on the bearish swing side anyway, even though there are some picks out there. And then just to kind of top it off, I look for one of these events. So usually these are optional, but it will affect my trading size usually if I don't have everything that I'm going for. So to be fair, this one doesn't actually apply to pullback specifically, but all-time highs, D1 events. So that will be the ones I use the most, is these three here. It's crossing an SMA, bouncing off an SMA, and so it's basically what algorithms would kind of look to, really key trend lines, that sort of stuff. That we'll see on the charts. We want to see a compression break, that could also be a good one, or we want to see Heikin-Ashi continuation or reversal would be good. HA reversal on chunky volume is fantastic, and depending on how many of these are ticked, basically depends on what size that I trade, basically. So kind of A tier trades, B tier trades, and C tier trades. C tier trades I try not to do. This is like a visual representation for me to be like, try find something better if we don't have all of these ticked. And this one here basically should be risk to reward. So it should be greater than like a 1 to 2. You know, if you're risking $10, you want to be making minimum $20, but usually upwards of that. So first slide, I suppose, what is relative strength? Really simple analysis, and this is a trading view metric that does it, so it's quite a common one, but it's basically, has the stock shown relative strength against what the market is doing, and ideally what the sector is doing as well. So here's the market on the 5 minute, absolutely flat, didn't even barely, to be fair, move during the day, just went up and down, done nothing. Whereas this stock, ASTS, done very well. Right, really nice relative strength here, really smooth, and we have a pullback. This would be our entry point if we were doing this. Obviously, we would look at the daily and some other time frames first, but this is just an example of what is relative strength. So really key to the strategy overall. What is the relative strength, and does it have it across ideally multiple time frames is what we want to see. The D1 void. So this is what I'm talking about risk to reward. This is a stock that I've been eyeing up. It's Robinhood, the financials, and so in black here is probably roughly where I've put my stop. and 137 is the current price. So what I would want to make sure is like say I took the trade today, I would be risking $3-4, but what I'd be trying to make is $16. So cut that into a ratio, 4, 8, 12, 16. You'd be risking roughly like 1-4. That's a nice ratio. I can get behind that. Whereas if the stock was all the way up here, I would just be a bit more wary about where my stop is and the support levels underneath my stop as well. So this is an alright example of just one that I happen to be looking at. And we can kind of see that in my JPM trade as well, actually. So just skipping ahead, this is JPM trade that I like, but it's took the trade here. Again, my stop is down here, and my target is roughly this all-time high up here. Ideally, I don't want to see a lower high formed. If it does, I've moved my stop up, so either way I end up with profit at some point, and it's kind of around where this blue line is-ish. But I also added here as well, because I was right. I could have taken profit here, but I was aiming for a bit higher. Next criteria I'm looking for is a relative volume. So this is just volume plotted against this blue line, which is the average over the 50. So it's a 50 simple moving average. But it tells us, yeah, that kind of institutions are in this move. So really nice move here from Roku. It's below the SMAs, and it absolutely just blows through all of the SMAs. I wouldn't take that yet because I'm waiting for confirmation. I want to see this level tested before kind of going on. But when it does, it potentially might be quite nice if it holds, because you've got lots of support levels here. These are the EMAs, these two. This orange one is the anchored VWAP to earnings. And yeah, we've got some SMAs here as well. So potentially this could be a nice reversal given a bit of time. But it's the volume I really like here in this breakthrough. Because the same could be said, if we're bears. If we were bears, the stock was coming up here and it nicely rejected off of here, right? Nice volume. We might take that as a bear. But the problem is that you just don't have the follow through. So that's why I'll make sure about this one, because I'm long at the moment and I have a bullish bias. I want to make sure that this level holds if it does pull back, because this one clearly did not for the bears, and I don't want to be in that same position as they were. Sector relative strength. Again, I just kind of picked these out looking at, this is FinViz, so you can usually see the day performance, the week, and monthly down here, but they also have a map thing that I think is quite useful. So tech, clearly doing pretty well this week. It's only Monday, so it's obviously going to be leading the charge this week. So I tend to look to the monthly to see what's happening. And I can tell you already that it's XLV and healthcare that's doing pretty well at the moment. So just some examples. So yeah, I jumped to this, but this was a trade I took last week that I like, that really summarizes the strategy that I kind of like. Can't see the whole chart here, but JPM overall is pretty bullish, I can tell you. So let's actually just jump in and just have a quick look at JPM. But JPM here is pretty bullish. I like its D1, right? It's pretty strong. It's having a good old time of it. Had some pullbacks, that's fine. Ideally, we don't want to kind of invest head and shoulders, but that's what I'm looking for JPM, or sorry, some these kind of breakout pullbacks to these SMAs and then breaking out from there. But the first thing I start with is, do I have the right market thesis in my head? Am I trading in the right direction of the market? So wait usually half an hour, the start of the day, to see what is the market up to. Is it bullish or is it bearish? There's no point going long if we get absolutely trolleyed from the the market's pretty down, quite hefty, not bad, by a couple of dollars. So I'd be a bit wary of going long or initiating some positions, because part of my market thesis as well is like, how long do I have to work on the trade? And there's the Fed, they're talking this week on Wednesday, so I'd be a bit wary of that. But I'm in this from last week, so I've got a bit of time, and I can always cut it, and I'll probably be in profit by the time I have to cut it, if it's not got to where I thought it would be. Then I moved to the D1, like the D1 as I just said. My risk to reward is good because I can exit down here because I entered here. So this would be the low down here, a couple of dollars off. It's like $2-3. So entered at 308. My stop losses were 306 down here. And yeah, if we hit 314, I will add. And my target is roughly kind of 322, this all-time high. So trying to risk a 1 to 4 risk to reward to make that work. And yeah, I like this because it's got, you see the sector's pretty strong here in green, and the stock itself is also strong. So it's being dragged up mostly with the sector, but yeah, picking a strong sector, and ideally we want a strong stock to go within that as well. But like this breakout, like the strength that the stock has started to show here in white, liked it. It's strong on different time frames, and the overall daily chart on JPM is pretty solid. This was another example of one I liked quite a while ago. I think this was Feb this year. But it was, yeah, this is a great example. Really strong on the 5-minute. Look at this green line. Super great strength. You can see in the background, this is the S&P 500. As the S&P 500 went, was kind of not doing very much, and even to the point of going down here as well. So what was the stock doing? Amazing relative strength, and then held all of its gains. Beautiful as the market was going down, and as the stock was quite extended. Really, really nice entry on this potentially. As a day trade, can't remember what the daily chart looks like, but this is just from a previous presentation that I had. But yeah, nice bounce off the VWAP. Could go long here, but I would wait for this to break nicely in here, and green was my entry, and we're off. So on the 5-minute, this is what you want to see. These really nice entries. This is fantastic, but you don't see these every day, which is why it's trading is easy when you pick out these examples, but the reality of it can be very different. So this is very much a different chart. This is why I like having strong support underneath my positions, and kind of having like I've messed up points. I still like AXP, to be honest, but the reason I chose this, so this is the same date as JPM, this candle. So that is the same date as this one here. But the reason I didn't go for AXP, even though to be fair at the end of the day, the volume was solid, is it just doesn't have much of a support underneath it. I really like having strong support, like a rock hard foundation, rather than one of sand that can be wiped out pretty quick by a bit of an engulfing candle. So just moves the odds, I think, in your favor slightly. That's why I kind of like it. Fake outs, really hard. It happens a lot. Fake outs, so how do you reduce those fake outs? So still collecting a lot of data for this, but I think what I've liked to see is I like to see these levels tested. So this is an SMA here. This is the 100 SMA. But what you want to see is not to go long immediately on a bit of a reversal candle. So respect this move. Clearly it's gone down with the market as well. But don't just go long on the first bullish hammer that kind of forms. I like to see these levels prodded and tested. So, wait. You could be waiting, still waiting. That could be the move. And sometimes it is hard to detect those fake outs, really. I probably would have gone long here. I would have been patient, waited for this, and yeah, it didn't launch off as I would have expected. But as long as our risk to reward is solid, we would risk that. But wait for the retest and wait for confirmation of breakouts. This was just Microsoft that I saw today when I was just having a look at some bits. But you can see here, difficult, right? Difficult to pick that off. Here's the SMA in green. It's been kind of hovering around this level for a while. But you can kind of see here, tries to break out. And it's like, nope, could have gone long here. But again, I'd wait for confirmation potentially of that level. even though you can see the volume candle here, still decent, right? So waiting for confirmation is difficult. That's why I like retests. I really like seeing a retest. Again, it holds, shows a bit of strength, then comes back. Again, we can kind of see this as our, again, the compression break is what we'd be looking for. So I would potentially go long here in this candle because I could see this level has been broken and it finishes above that level. That's pretty bullish. And you just have to be patient at this level. Could have triggered the stop potentially, but this is what you're aiming for, and then eventually it does get going eventually. But it's hard. Like fake outs are pretty common in any strategy. Nothing is 100%. So just building like a knowledge base in your head of what works, placing your stops in a good location, and just being patient and try to take those A-tier trades basically. This was just an extra bit I had about when we see breakouts. I don't particularly like Roku style breakouts like this. I think it's nice, but I like to see a stock kind of come up, test it, come up, test it, kind of like a stair-steppy, relentless kind of pressure, like a stair-stepping. This app was a great example. So this was long here in the original image I shoot for APP, and yeah, I just love that the stair-step pattern, right? Up, 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 bam. And then the previous days a VWAP becomes the support. Again, no reason to exit. Damn, no reason to exit. We're still doing pretty well. Bam, up here, no reason to exit. So it helps you, keeps you in trades, but also just shows a good example of strength and just healthy ascension or rising of stocks, rather than massive big breakouts. I particularly like big engulfing candles because they always kind of tend to take a bit of time. You can see Rocky, that candle we were looking at, is it seems to be going off. So if I have a choice between letting this one go, not taking it, or taking it now, just let it go. Yeah, I would let that go. So I'm looking for just something that more stair steppy. I want to see it tested before I go long. So I'll set an alert and I'll just wait. To see a pullback. So what I like to use is like LRSI. You can kind of see it down here, LRSI. But what I'd probably wait for is just maybe set like a 15-minute or an hour LRSI, see it pull back, and go above 20 again. And just see what happens really. So I just want to see that crossing up 0.2 value. So that's like down here somewhere. I just want to see it crossing back up like this green sort of marker. That's what I'm looking for. If it happens, great. If the stock keeps going forever, which I'm sure it won't, it will get up to here and then probably won't go much further. Because just to look at stocks forever, they rarely. That's why I like the EMAs and have them on. They rarely stretch past them and stay stretched past them. Like this is obviously an earnings calendar event, but you see it like an elastic band. They always ping back eventually. No matter what direction, bearish, bullish, they will always ping back after stretching out. So with earnings, you see this a lot most of the time. You see the violent reaction either direction, but usually you see a bit of a tightening, then kind of going off to the races. So up and then tightening, up and then tighten, up, tighten, up, tighten. Nothing goes up forever. So just got to be patient and wait for that pullback. So I just wanted to put this down into a nice video, really, about what I'm trying to trade at the moment strategy.